Alright, so the date is the 19th of April 2018, and this is the first video cast for deadcatbouncefund. In this video cast, I'll be discussing Bitcoin and Bitcoin only, and I'll be making two projections. I'll be making a short-term projection of this short squeeze that we're witnessing right now in Bitcoin, and I'll be making a longer-term projection for Bitcoin as to where it is going to bottom, and even more important than that, how the price will behave near or at the bottom, which is even more important than any number projection for a bottom that you are going to see. Okay, so let's first start with this short squeeze that we're witnessing right now. The action right now that you're seeing in Bitcoin is nothing but market makers trying to get rid of all the shorts that piled in this area right here on the chart. Most of the casual traders that do not understand that they should not be chasing the price piled in and got short right here after a massive move to the downside from 11.7 down to 6.5. So this is a massive move. This is 5k move to the downside. And those guys started shorting Bitcoin here. So if you're a market maker and you see that people are becoming extremely short here in this area, what you want to do is you want to take their money. And how do you do that? You create a short squeeze where you just liquidate their shorts. This is what you do. And even more important than that is the position that you are going to do that. Because you have to think forward in time. What happens next time you go to the same place of the chart in terms of price? So we had the massive crash in Bitcoin from 20k to 10k. Then we had the dead cat bounce, and then the big crash from 17 down to 6k. Then you had this fake recovery where everybody was bullish and they were thinking that we were going to moon. But in fact, all we did was we went to the top of the channel and we back down, and then we continued down until the bottom of 6k. Now, what do you think all the casual traders will be thinking next time we go back down to 6k? They'll be looking at this low, they'll be looking at this low, and they'll be looking at all those lows here, and they'll think to themselves, well, maybe we are very close to support. Why not go long? All right? And it makes sense, you know, the price just refuses to go lower than that. But the truth of the matter is, if you're a market maker, you're going to do exactly that. You're going to create a perception of a support level by, you know, making the price hit several times this level and then go up. So that next time the price goes down, everybody will go long, while the price will actually continue lower. So not only they will squeeze the shorts to the upside here and take the casual players' money, but they will also squeeze all the longs that will go long at 6k next time before the price continues lower and probably goes to 5k, 4k, 3k, and potentially 2k before it actually bottoms. All right. So let's say that you're a market maker and you actually engineer this move to the upside, this short-term manipulation of the price. How high do you want the price to actually go is the question. Well, you want to make people bullish again. All right. So you need not only to squeeze the shorts and then continue lower, but you also want to make it the most people bullish again. Well, how do you make people bullish again? Well, you usually do that by exceeding a previous high. This is how you do it. So people will be looking at this high right here, which is 9.2k. And immediately after this high, this is a significant high for many people looking at the chart, especially those who trade short term. And they'll get bullish and they'll get long. And this is exactly when you should be going short. So whenever we exceed 9.2k in the price of Bitcoin, this is where you should be going short because everybody else will be going long, thinking that we are now going to the moon. While in fact, there is no evidence, there is zero evidence that Bitcoin is bullish, even though we have moved above the channel top. This is absolutely no evidence of bullishness, and I'm going to show you why. And this has to do with a longer term prediction for where Bitcoin is going to bottom. So what is this? This is the Nasdaq price chart from the 90s up to 2002, 2003. All right. So many people argue that the dot-com bubble should never be compared to Bitcoin or cryptocurrencies because they're fundamentally different. But anybody who has followed me throughout the years and my analysis know that I don't care about fundamentals. All I do care is about chart patterns and the direction of the price. Is it going up? Is it going down? If it is going down for quite some time, do we have any evidence of a reversal? Maybe there is, maybe there isn't. But in this case of the Nasdaq, what you have is the exact same pattern of the price. What you have is the smart money accumulating, right? This is exactly what we are having here. Then you have several corrections, what they call bear traps. You have the huge bear trap right here, just prior to the price exploding. You have the very same thing with Bitcoin. You have the big bear trap. You have a little bit of a smaller bear trap right here. You have absolutely the same price action. All right. And then you have the top, the blow off top, where the market just goes vertical and everybody thinks that Bitcoin is going to 1 million or 500,000 or thereabouts, which is, of course, this was never going to happen. But people believe it. People are in euphoria. They get greedy. They want to make money. They don't want to miss. They have a fear of missing out the gains of Bitcoin, and they start buying right here. While the smart money that bought here, or even at a cheaper price, below $1,000, they started selling. And what this caused was a big sell-off in the price of Bitcoin, and the same way it caused a huge sell-off in the price of the Nasdaq. And then you have the classical DeadCatBounce pattern, where you have a recovery, a top, a second top, and then the big crash to the downside. And this is what has happened in Bitcoin. You have the top, the second top of the DeadCatBounce, and then the massive crash from 17,000 down to 6K. And then you have a recovery that brings the price back to the top of the channel that was formed by these two lows. And what happens is that the price rejects and it goes lower. And then at some point, for some reason, the price decides to go up and break the original channel, just like here. It does that. Now, anybody who is watching the channel and doesn't understand that, just because you break the channel doesn't mean anything, unless you have some sort of a structure to the upside, they'll get bullish here. So yeah, they're probably getting bullish. And what they don't realize that you can slide on the top of the original channel for quite some time. Now, the Nasdaq was sliding on the top of the channel from 2002 March to 2002, this is July, almost August. So this is 5 months of sliding on the top of the channel. And then it made a higher high, so the initial support after the breakout was here on the top of the channel. Then it made a little bit of a higher floor of the price before actually bottoming out. All right. So I expect something very familiar to happen with Bitcoin. A move up, make everybody bullish again, and then start drifting on the top of the channel, probably making a bottom at around 2.9K. Okay. Usually this is what happens. No matter which bubble pattern you're looking at, you will see the same thing where the this low from the bear trap is exceeded every single time. You can go back and look at all bubbles in history. There is always this bear trap, and then price goes up, and when the price reverses back down, it has to take this low. You can see any bubble in history. One recent bubble is silver. You can look at silver, you can see exactly where it bottomed. We took out this bottom right here. Now in Bitcoin, this is 5.4, so we will almost 100% going to take out 5.4 as a price before we actually find some sort of a bottom in Bitcoin. Now, what I'm going to show you is that this channel, I have been following this channel for quite some time. Actually, it was formed in February this year, and I was looking for resistance on the top of the channel. This is the very same channel that you see with the two lows being connected right here, and nobody was looking at the resistance right here because they did not connect those two lows and just copied it from the top. This is all you had to do. And what happened is exactly this. We found resistance on the top of the channel and we started going back down. And then after the move to the downside, just like in the Nasdaq, after the initial rejection from the top of the channel, we break above the channel and we start making new lows outside of the original channel. And I do believe this is exactly what is going to happen. So if you're a market maker, you need to take out the previous high. So the previous high is 9.161. So the price of Bitcoin has a pretty nice chance of going above 9K here before actually it reverses back down. Many people will go long once it reverses back to 6K. They will be expecting a bounce that 6K is the bottom and so on and so forth, but it's not going to be the bottom. There is no evidence whatsoever that this is the bottom. Actually, the way that the chart looks, it looks like it is trying to push on the price to break the 6K level, but it's not able to, so it needs a little bit of a momentum, so it needs to go back up and then break the 6K level, and this does not look like a bottom at all. Not like a bottom. This is how a bottom actually looks like in any bubble. You have the big down move. You have several V-shaped recoveries like this. They are never the recoveries. You never see V-shaped recoveries after a bubble pops, because usually when a bubble pops, the masses, the casual investor, the people that are already afraid and they already lost a lot of money, they're not going to put money back again into the same financial vehicle because they're afraid. So there will be a wall of worry for quite some time. The market is not going to moon like everybody expects once it bottoms. There will be a very long period of time, maybe many months, maybe even years in cryptocurrencies, where the market will try to recover, and we'll hear a lot of people talking about climbing the wall of worry in cryptocurrencies. So this is exactly what is going to happen in cryptocurrencies. They are no different. Everybody who tells you that things are different, it's never is. The price patterns are always the same, and every time a bubble pops and scares the investors, it's very hard for this same vehicle to actually gain momentum and make another bubble. It will make another bubble, but it will be, it will take patience, probably a year or two from now. So where is Bitcoin most going to bottom? Now, we talked about the fact that we need to take out the bottom of the latest bear trap. So we talk about the fact that Bitcoin has to move below 5.3, right? In fact, when you look at other examples in history, you figure out that it's not just that it takes out the latest bear trap, but actually you need to go back one bear trap below that, you'll see that in almost every instance of a bubble popping. So in Bitcoin, it will be 2.9 right here. 2.9 is where most probably you're going to see it in Bitcoin finding a real bottom and not fall any lower than that. 2.9. And actually, this is the point where most of the people will totally give up Bitcoin. All right. Some people are talking about going back to 1.7. I'm not sure about that, but I can guarantee you that the chances for 2.9K for Bitcoin is really, really high. And, just don't get caught by short-term noise in the market. Soros got in the market, or Buffett said he's going to buy Bitcoin or stuff like that. It is completely irrelevant. The most important thing is to see whether you have structure to the upside. Yes, you might miss some of the gains from the bottom, but it is better to miss some of the gains than lose a lot of money down the way. Because let's say that we go up to 9.4K, we make a bottom top, and actually buy here, and then we go down to 2.9K. This is a huge loss. I mean, this is 70% loss of purchasing power. You're gonna have the same amount of Bitcoins, but if you measure it in terms of dollars, or if you measure it in terms of gold or silver, you're gonna have less of all other stuff. So, all right, so this is it. I have made my case on Bitcoin. We're going to 9.4K. Most probably we're now in no man's land. I'm not going along here because we're still in a downtrend. I'm not going to bet my money that we are going to 9.4. But if we go to 9.4, I will for sure short the market. And I will be waiting for the price to actually be drifting along the top of the channel for quite some time. Alright, so this is it. This was the first update and first video cast from deadcatbounce.fund. I hope you liked it, and I'll be posting a lot more updates, and I'll be covering many more financial vehicles, from the normal currencies, more cryptocurrencies, Litecoin, Ethereum, so on and so forth. I'll be covering gold and silver. I'll be covering the normal currencies, oil, and the indices, the S&P 500 and Dow Jones and the DAX. All right, so this is it. I'm out.